The Shiba Inu landscape has shifted dramatically today, as new on-chain data reveals a staggering collapse in holder profitability. While the community remains hopeful, the numbers tell a different story of a brutal sell-off that has left many in the red. Is this a temporary setback or a sign of deeper trouble for the meme coin giant? Today we break down the metrics that are defining this critical market moment. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. To understand the current state of Shiba Inu, we must look back at the volatile journey it has taken through late 2025 and into early 2026. After a period of intense speculation and the launch of various ecosystem projects like Shibarium, the asset entered a challenging phase. According to data, Shiba Inu faced a brutal fourth quarter in 2025, losing approximately 37.3% of its value as the broader crypto market cooled. This downward trend set the stage for the current on-chain reality, where the majority of holders are now underwater. The project has always relied on its massive community to provide a floor for the price, but the sheer volume of the recent sell-off has tested even the most loyal supporters. As we move through January 2026, the focus has shifted from ecosystem development to pure survival and capital preservation. The token entered the new year under the shadow of this bear market, making the recent plunge in profits even more significant for long-term sentiment. The transition from a high-growth meme coin to a more mature utility-focused asset has been rocky, and the on-chain metrics are now reflecting the growing pains of this evolution. The primary development today is the massive contraction in holder profitability following a sustained sell-off. According to reports, the profitable supply of Shiba Inu has crashed by a staggering 62% in just 1 week. This means that a vast majority of tokens that were previously held at a gain are now being held at a loss. Approximately 140 trillion Shiba Inu tokens turned unprofitable during this recent price decline. This shift is one of the most significant profit collapses in the project's history, highlighting the intensity of the selling pressure. Currently, it is estimated that only about 57 trillion tokens remain in profit, a fraction of the total circulating supply. This event was triggered by a combination of large-scale whale movements and a lack of fresh retail buying power to absorb the sell-side pressure. The sell-off has pushed the price below several key technical levels, further accelerating the move as automated trading systems and stop-loss orders were triggered. This profit plunge is not just a number on a screen. It represents a massive shift in the financial health of the Shiba Inu community, with many investors now facing difficult decisions about whether to hold through the volatility or exit their positions. The market reaction to this profit collapse has been one of cautious consolidation and heightened volatility. As of January 13, 2026, Shiba Inu is trading at approximately 885 units. While this represents a slight stabilization compared to the lows of the week, the overall trend remains fragile. According to reports, the asset is hovering near its 20-day exponential moving average, which sits around 830 units. This level is being closely watched by traders as a critical support zone. A break below it could lead to further panic selling. The 24-hour trading volume has reached approximately $106.7 million, indicating that there is still significant activity in the market, despite the negative sentiment. However, analysts note that much of this volume is driven by exchange inflows, which often signal an intent to sell. The market cap currently stands at around $5.17 billion, a significant drop from its previous highs. The reaction across social media and trading forums has been a mix of disbelief and strategic positioning, with some traders looking for bottom signals while others warn of a more prolonged decline. The price action today is a direct reflection of the on-chain reality, a market that is heavily weighted toward holders who are currently in a losing position. The evidence for this profit plunge is clearly visible in the on-chain metrics. The percentage of addresses that would be in profit if they sold at the current price has hit one of its lowest points in recent months. The 62% crash in profitable supply is backed by massive exchange inflows, which reached multi-month highs this week. When tokens move from private wallets to exchanges, it is typically a bearish signal, and the recent data confirms this trend. Expert commentary on these on-chain metrics suggests a period of significant redistribution for Shiba Inu. When such a large percentage of the supply becomes unprofitable, it often leads to a capitulation phase where weak hands exit the market, potentially paving the way for a more sustainable bottom. However, the current lack of retail engagement is a major concern. Without a fresh narrative or a significant increase in the utility of the network, Shiba Inu may struggle to reclaim its previous profit levels. The fact that 140 trillion tokens turned unprofitable in a single week is a shock to the system that could take months to resolve. Some experts point to the high concentration of tokens in whale wallets as a primary risk factor. If these large holders continue to move tokens to exchanges, the downward pressure will persist. The Shiba Inu community is currently navigating a wave of fear, uncertainty, and doubt following the profit plunge. On social media platforms, the discussion has shifted from moon targets to discussions about average entry prices and long-term holding strategies. Many members of the community are sharing their diamond hand stories to encourage others to stay the course, but the on-chain data suggests that many are indeed selling. Developer hints have been focused on upcoming network updates, attempting to shift the focus back to the ecosystem's fundamentals. However, the compensation program remains a hot topic, with some users expressing frustration over the pace of recovery. The overall mood is at its lowest point since the mid-2025 consolidation phase. Despite this, the community's ability to organize and promote the asset remains a unique factor. Influential community members are calling for more transparency from the core team regarding the recent whale movements and exchange inflows. The synergy between the community's social presence and the on-chain reality is currently strained, as the hype narrative struggles to compete with the cold, hard data of the profit collapse. Looking ahead, the forecast for Shiba Inu is heavily dependent on whether the current support levels can hold. In the short term, over the next month, analysts suggest that Shiba Inu will likely continue to consolidate between 800 and 900 units. If the 830 units support level is broken, we could see a further decline toward the 700 units range as more holders capitulate. For the long-term outlook, spanning the next 3 years, the narrative is more complex. If the Shiba Inu ecosystem can successfully transition to a utility-driven model and continue its aggressive token burn strategy, there is a path to recovery. Some models suggest that by 2029, Shiba Inu could reclaim a market cap of over $10 billion, potentially pushing the price back toward the 2,000 to 3,000 units range. However, this is contingent on the broader crypto market entering a new bull cycle and Shiba Inu maintaining its relevance among newer meme coins. The next 30 days will be critical. If the profitable supply continues to shrink, it will indicate that the sell-off is not yet over. Conversely, a stabilization in the profitability metrics would be the first sign that the market has found a new equilibrium. The risks associated with Shiba Inu at this juncture are significant and should not be overlooked. The primary risk is the overhead resistance created by the 140 trillion tokens that recently became unprofitable. As the price attempts to move back up, many of these holders may choose to sell as soon as they break even, creating a constant sell-side pressure that caps any potential rally. Additionally, the high concentration of tokens in a few large wallets means that the actions of a single whale can have a disproportionate impact on the price. The recent exchange inflows are a clear warning sign that some of these large players are preparing to exit. Furthermore, the network's performance continues to be a point of contention. If it fails to gain significant adoption, the fundamental case for holding Shiba Inu weakens. There is also the risk of meme coin fatigue, where investors move their capital to newer, more exciting projects with higher growth potential. Finally, the broader regulatory environment remains a wild card. Any negative news regarding the classification of meme coins could lead to a rapid de-risking across the entire sector. Investors should be prepared for continued volatility and should closely monitor the 830 units support level as a gauge for the market's health. As we conclude today's deep dive, the on-chain data for Shiba Inu serves as a powerful reminder of the market's volatility. The profit plunge is a significant event that has reshaped the landscape for holders and traders alike. Will the Shib army find the strength to push through this sell-off, or is this the start of a longer winter? Stay tuned to this channel for the most accurate, data-driven news. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.